Good evening, everybody. Today is Thursday, the 30th of October, and I wanted to talk about the financial situation in the US mainly, but the thing is, the US financial market is then what pretty much determines everything else. Every other market is, to some extent, a subsidiary of the United States. So, I believe that we are in a situation that is very, very similar to the 1973 oil crisis. The reasons triggering this are very, very similar. So, if we look at the reasons that triggered that crisis, we see that there was a financial bubble in safe blue chip stocks, which is very similar to today. Today we have a S&P 500 that is in a total bubble. You can see it over here. Let me just show you real quick. This is the S&P 500. Do you think that the economy has actually grown so much over the last year? Has it gotten 18% better? Over the last 5 years, do you think the economy has doubled? Very hard to tell, really. And the main thing about this is that this is being pretty much only being driven by Nvidia. Nvidia is the main driver of this. Nvidia is up 46% this year. It's up an enormous amount in the last 2 years. It's like 2,000% up in the last 2 years, something like that. And it's just crazy. And the fact is, this is a very, very significant portion of this growth. So just as in the 70s you had the Nifty 50 stocks that were too big to fail, safe investments, all of that. Today you have Nvidia, which, has AI been used for anything useful so far? Has it, created any jobs? Has it created any value whatsoever? I don't know. So having this stock in particular representing, I think it was something like 16% of the US GDP. That's a lot. That's very weird. Then the second factor driving this was massive government debt from unfunded wars and social programs. Massive government debt is there. Massive government debt is something that is going on, that is being fought against. But, I think the US debt clock is a good metric to understand this. The US is currently $38 trillion in debt, which is absolutely crazy. It's a lot of debt. It's a level of debt that you've never seen before, and it's going up every second. Look at how fast this is going up. It's added $1 million in, just the time I started recording this video. So really, that is weird. So also printing money instead of raising taxes. Trump has cut taxes. He has cut corporate taxes, and the printing money may not come directly from the Fed. It may come from stablecoin issuing, which is set to probably, speed up as we go through his presidency. But the thing is, monetary expansion is there. Cold War tension with nuclear alerts. Does this remind you of something? The players are the same. The United States on one side, Russia on the other. There's conflict going on there. Yesterday, President Putin announced nuclear weapons of a new generation, the Brevnik missile, which should be pretty much impossible to catch. So that's eerily familiar, 25 years of Middle East conflict building to a boiling point. So basically, the tipping point of this crisis was that the Saudis and other Arab countries that owned a lot of oil just embargoed it because of tensions with Israel. Guess what is happening right now? Iran controls the Strait of Hormuz, from which a lot of oil goes through. So that's something. Qatar lost the security that it had with Israel after Israel attacked Qatari soil. And the wars in the Middle East don't seem like they're stopping anytime soon. There was a peace deal brokered in Palestine, which seems to have collapsed. And tensions with Iran have been ongoing. So that is something that hasn't stopped, will probably stop, will probably not stop, and will probably, sound very, very similar to this. Dollar crises, the Bretton Woods agreement collapsed. This is the next point. In these years, gold prices skyrocketed, mainly because gold was pegged to the dollar. So the dollar had there was a certain amount of dollars that was equal to a certain amount of gold, and you could convert that. But the thing is, when Bretton Woods collapsed, you could no longer convert your dollars to gold at that fixed rate. The price just skyrocketed, and I think it went like 10x. Gold got 10x more expensive. Maybe even more. Maybe it was like 15x. It went from like $35 an ounce to like 425, something like that. I may be wrong with this. Please fact check yourself. But that is something. Gold was at the very center of this. We've seen gold going through a rally, unlike any that I've seen recently. So this point also rings true today. Political crises. We've seen this in the assassination attempts. Back in the day, it was President Nixon resigning because he had apparently cheated in the elections. And well, today we have a very, very deep political crisis in the US. It's being carried out with, social media, propaganda, assassinations. So there really is a lot going on there on this front as well. Industrial economy at full capacity, no spare production. I guess I'll have to look into this. Mainly what it was is that basically there was a shortage of goods, I guess. Rising inflation. This is like so similar to today. OPEC gaining power, coordinate cartel with geopolitical motives. I don't really know what OPEC is. Let's check that out real quick. Alright. So the oil exporting countries colluded to raise the prices. Stock market was already crashing before the embargo. And there was a speculative mania, growth at any price, which is something that we're seeing in AI as well, which is then driving the whole market with itself. And, obviously this cannot go on forever. Warren Buffett has launched the alarm as well. He has said that, the US debt is unsustainable, and when you're doing something that is not sustainable, you should expect it to break sometime. I don't think we are at the breaking point as of yet, but next year may as well be it. Next year, we are seeing the nuclear deal between Russia and the United States coming to an end. So their, truce and agreement to never use nuclear weapons ends next year. And as of now, there are not any ongoing talks for that. But just think about how the markets will react if a nuclear war was, coming. If a nuclear war was in sight, what do you think people would do with their stocks? They're not safe. What do you think businesses would do at that point? Do you think businesses would be safe to operate? Do you think it would be a good idea to operate a business? So anyway, this is a set of ingredients that we see today. They are very much here. And it's interesting to look at which assets perform the best in this situation. So let me just get that, please. All right, so looking at the performance of asset classes back then, we can see that the losers were stocks, which suffered devastating losses. I'll tell you, I've actually sold all of my stocks. I had participation in the big tech giants. I sold all of it. I sold every single one of those. First of all, the internet is dying. Second of all, it is parasitic. The business model of these companies is fundamentally incompatible with a good life. These companies make money from collecting data in a parasitic way, collecting data in a very exploitative way, and making uses of that data that go well beyond what people should be comfortable with. The only reason that doesn't happen is because probably people are not aware of it. But anyway, stocks suffered devastating losses during this crisis. Bonds performed even worse. You can see that in bonds today. Bonds are being dumped like there's no tomorrow. Bonds are being destroyed as well. Growth stocks got obliterated. So these were the big tech stocks of that time. The Nifty 50 group got destroyed. These had very high PE ratios, which, I mean, if you look at Tesla today, if you look at Palantir today, if you look at Nvidia today, if you look at many of these stocks, they have absurd PE ratios. Cash also got destroyed. Cash is being inflated in a absolutely unsustainable way. Even today, every day you're losing purchasing power. Every day that goes by, your money is being taken away from you. Or at least the power that your money holds, the purchasing power that your money holds, is being taken away from you. The big winners, gold, which we've seen rise. Commodities. Now, commodities is what I absolutely believe is a good bet. For a bunch of reasons, I think that commodities become, in this day and age, the most valuable thing that you can own. The multiplicity of reasons is, first of all, artificial intelligence. If back in the day you needed some sort of competence, some sort of labor to get the most out of your commodities, I think that artificial intelligence changes that to the point that today the only thing that matters is the raw resources, and everything that comes afterwards is commoditized to the point that the only thing that actually matters is the commodity itself. So how high quality is your steel? How high quality are your rare earth materials? How high quality is the silver that you're using? And even for food, how good is the grain? How high quality is the rice? So I believe that is the most important thing. The labor, the processing of these raw resources has been commodified. You can just hire people in India to do the same job. You'll cut the costs that way, and likely with AI, you can maintain a sort of standardization. You can keep the outcome much more similar between different places where you do the processing. So at the end of the day, commodities, in my opinion, are the most important thing that you can buy today. If you just think about it, what are you gonna do tomorrow? Are you gonna buy Facebook stock with every internet connection cut? Or are you going to buy maybe wheat futures, maybe water futures? What makes more sense to invest in a time of crises? Water, which everybody drinks, which everybody uses, or Meta, which runs ads of things that I think nobody wants to buy and is basically a propaganda organization. But anyway, next thing was energy stocks, and the oil producing nations came out on top geopolitically. They gained a lot of money, they gained a lot of power, and they saw their prices going up significantly from $3 to nearly $12 a barrel. And then defensive stocks performed well, but not at the point of gold or commodities. They tended to perform better, but not by an absolute margin. They just outperformed the stagflating market. Today we're seeing this with a lot of defense stocks, so that is interesting. Now, a final thing that I think is worth noticing is that the crisis today is emerging again for very, very similar reasons because of oil, because of oil prices, because, well, one of the largest oil producers in the world is Russia. They are being sanctioned. Their market is being manipulated from the sanctions. If you look at another country that has been involved in war recently, that is Iran. What does Iran have? Guess. Oil. And now, as I speak, the United States seems like it is trying to pursue war and regime change in Venezuela, which, surprise, surprise, is once again a producer of oil. So, crazily enough, we find ourselves in a situation that mimics very much closely the situation that we were in the 1970s. I wasn't alive back then. I wasn't out here. But I'm not really feeling too well these days. But, the causes of today's geopolitical instability, of today's economic turmoil, seem to perfectly align with those of the 1973 oil crisis. Today, defense stocks are growing like crazy, and it's fundamentally all because of oil. Now, one last thing, I would say that together with gold, I see this being a great incentive also for Bitcoin. I see Bitcoin and gold almost as the same thing. Bitcoin is gold without the network effects still in place, but it's being built, I guess. A lot of institutional investment has flooded Bitcoin, and I don't think BlackRock ever invests to lose money. So I think that is also an asset to look at. But I think, commodities have been going up. But I think that as money is drained from the stock market, as the stock market comes down, and it likely will be because of some trigger that, we cannot predict. It's going to be a black swan probably. But some sort of trigger is going to come and trigger a major outflow of capital from stocks, from unproductive assets. Bonds already have seen that. And all of that is going to drive commodities and energy and oil and defense stocks and gold and probably Bitcoin much, much higher, just as the stocks lose that money. And likely also real estate is going to go down, and likely also, bonds, obviously. But the thing is, there is little to no industrial capacity left. What factory are you going to build today, right? There's like maybe 20, maybe 50 companies that make sense, but the S&P 500 is absolutely overvalued. Real estate is a bubble, and bubbles cannot go on forever. So I hope that this video was a good account of today's situation, of the 1973 situation, and thanks for watching.